Right guys, so welcome to a video on strategy potential. So again, you may be sat at home wondering, why should I choose this style of trading when there's a million different ways out there? And again, super valid question. So allow me to try and clear that up for you. So here at The Social Traders, we trade a strategy that is compiled up of price action, patterns, but also smart money concepts. So what we do is use our price action and our patterns to understand where the market's going, the overall direction, and also the point in which the market is likely to reverse. We then use our smart money concepts to hone in on an area of interest, maximize risk to rewards, and also remove emotion. Now, due to the effectiveness of this, we have had multiple community members go on to achieve over 6 figures in funding, and we have also seen multiple community members achieve double-digit returns month after month after month. So let's jump on the charts and give you a true insight into the power of our strategy.
Right guys, so you now join me on the chart. So we're going to have a look at our strategy potential a little bit further. So typically when you first get into trading, or if you've been and looked at some other strategies, you may notice that the stop losses are just a little bit too big. It's perfectly fine if that's what you want to do, but we've found a way that we can maximize our trade's potential a little bit further. So looking at these examples here, what we can kind of suggest is that, 1, 2, and 3 are all the same setup, but what we can do is we can refine certain things, add certain processes in order to maximize the risk to reward. So a standard sort of trade would maybe look something along the lines of this, where we'd have a 30 pip stop loss and we'd have a 120 pip target, and that would give us a 1 to 4 risk to reward. Now that's perfectly fine, but what we can do is get more out of a position. If we're risking 1% of our capital, would we prefer to get 4 back, or would we prefer to get 12 or 30 back? So that's kind of what I'm going to be explaining here. Now, if we look at the second example, we can see that the stop loss is a little bit smaller and it's only 10 pips. And the same target gets us a 1 to 12. So we can see that we've 3 times our reward there just by refining certain things and maybe looking at things in a slightly different way. And then what we can do is we can really refine right down onto the smaller time frames, and we can get stop losses that are sub 5 pips. And this can then lead to moves like this, where we're seeing 1 to 30s, 1 to 40s, or 1 to 50s. So, huge potential that we can have with these moves. So let's have a look at a live chart example. So here we have a live chart example on dollar Swiss. And this is a position that some of our community members actually managed to capitalize on as well. Now, looking at this, what we can see is the market was moving to the upside. We then took liquidity from these highs before breaking structure to the downside. So this looks like we could now be changing market sequence. We could be looking for a sell position. And again, don't worry, we will cover that all very, very shortly within the next couple of episodes within the course. And then what we can see is the market starts to pull back in one of those patterns that we've briefly looked at already. And we can see we've had that 1, 2, 3, and we've gone and pushed to the downside. Now, typically how people will be looking to trade this is they'll be sat waiting for price action in this area, waiting for the right sort of candlestick to suggest that this area is going to be respected. So it could be the case that we wait for this one here with the big wick, or it could be, some of these little ones here. So let's say, for example, they enter the market here, and their stop loss is going to have to be, around these areas here to make sure it's above the highs, above the wick, and make sure it's protected. So if they took this all the way down here to targets, they would be bringing about 4.78%, which is okay. It's a nice risk to reward, and obviously the trade went in the right direction. But if you can get more out of a position, why wouldn't you do that? So when we come back to kind of how we look at the markets, I'm just going to remove a few things here and add on a few other things. So I'm going to add on my short position and my rectangle. So you can see there that we had around a 30 pip stop loss on that previous example. And on this example, we actually have a 6 pip stop loss. So you can see there how we're just maximizing the risk to reward. However, we're getting the same area. You know, it's the same area of interest. It's the same sort of setup. We're just refining things further to get more out of the trade. So instead of 4.7%, we can take 24% on exactly the same setup. Now, what we do in order to find these setups is we're using the fact that the market has moved down, it's correctively pulled back, and then we're locating that smart money side of our trading. You know, where is the order block on the smaller degree? The market then comes and wicks straight into it. We don't have to wait for confirmation, and the market moves in our favor. So you can see how we're tying all those concepts together that we've already briefly spoken about. Now, don't worry at this point if, you know, break of low, the BOL there doesn't make sense. Don't worry if you don't understand about liquidity grabs or patterns or order blocks. We're going to cover that throughout the course. So hopefully you can see there the potential behind our strategy and why ours is well worth learning. Now, if you do have any questions about our strategy in the meantime, do drop us a message over in Slack and we'll get back to you straight away. But let's get on to the next video.